I'm Charlotte McLeod with investingnews.com, and here today with me is Brian Leni, founder of Junior Stock Review. Thank you so much for being here. Great to have you.
Oh, thank you for having me.
Really good to be talking with you, and we haven't actually spoken since September. So I'm gonna start simple and try to get your take on sentiment in the resource sector. So I'm seeing areas of really strong bullishness, but then there's also some pain points. So for me, it's a little bit confusing.
Yeah, it's pretty terrible. I would say it's probably the worst I've seen, which, depending on your perspective, is probably a good thing. Yeah, I think you want to see capitulation on both ends to tell you when sentiment is sort of changing on the upside and on the downside. And yeah, absolutely. I have a good network of friends that do the same thing I do and invest in this sector. And a lot of guys are looking for, other things to invest in or where to put their money. So I would say that's a pretty good sign of capitulation. Things can always go lower. But, I think that, I think we got to be near a bottom. The other side, like what you said, if you're invested in uranium, I think you're doing pretty well. And so you can have a different view of things. But if you're not, then, it's been pretty abysmal.
Yeah, I just wrapped up a uranium interview right now, so maybe that areas of bullishness is probably carrying over from that. Okay, so going back to that conversation we had in September, at the time, I believe you were looking to deploy cash. So following up on that, did you end up doing that? What ended up happening?
Absolutely. Yeah, that's one thing that, the market definitely affects me and what the ups and downs. But I have had some wins, and I'll take some of those wins. I've been good at taking profits and transferring those into things that are, at huge discounts. And so that's what I've been doing over the last 6 months, slowly, tranche buying on days when the market is a little bit worse than others. And that's when I'll pick up tranches of shares in the companies that I think have what I would call possible short-term catalysts. But again, the market has been so bad in 2022 and 2023 that those catalysts were being sold. But I think, in the last 6 months, I would say that's starting to change. I would say in precious metals especially, some companies are gaining traction. And I think that's something to watch for too. When you're kind of coming off a bottom, I think the better companies start getting valuations or getting share price appreciation before the rest of the crowd.
Okay, interesting. Because I was hearing that before where a company would release news and it's good, but then everybody sells because they're just sick of it. So that is now changing.
Yeah, I think it depends on what you're looking at. That's always seemingly the case. Is I think, depending on your portfolio and how you pick companies, you may not be seeing as much of an uplift as before. But I can think of a company. I'll give you an example. Kenorland Minerals converts their 20% equity stake in Frotet into a 4% NSR. Their share price went from 63 cents, and I think it hit a high almost of 80 cents. Now, that's not like a barn burner of a appreciation, but to me, if that happened a year ago or 2 years ago, maybe it doesn't get the share price. Maybe it goes down the other way, 15 cents, So to me, that's a good sign. Kenorland's a great company. They could put out good news. We saw the share price go up. It came back a little bit. But I think that's, again, another step in the right direction. And you're seeing pockets of it.
Okay. That's a really interesting point. We'll keep an eye on that one. So I took a look at your January presentation for the Metals Investor Forum, and I think you answered a question that everybody wants to know, which is what is the next metal that might be going into a bull market? And so you had mentioned gold, but more specifically, I think the gold stocks, which are disconnected. And lots of people are looking at that, wondering when will they catch up? So maybe we get your take on that.
Sure. Yeah, I think that's the most glaring opportunity for a bull market that we see out there. I think on the metal side of things, I think there's every reason that we've ever probably talked about. The debt's rising. If you have problems in Europe and the Middle East, numerous debt issues across, not just the States, but Europe, South America, everywhere. So I think there's every reason to think that the gold price or the silver price are going to stay in this range. We don't even have to talk about going higher. But the real is that disconnect with the equities. And so to me, I think what we just spoke about, I think there's at least a cohort of diehard investors that have been around for a while. Maybe they were waiting. If you look at, I can only speak personally. When I started seeing good news sold, I stopped buying new stuff. I made, over the last 2 years, I probably made 4 new picks, and they were at pockets where I thought things would appreciate, and I ended up being right. And so, but outside of those, I wasn't buying anything new. And I think we get to this spot today, sentiment is as terrible as I've seen it. Some share price, some news is being bought instead of sold. And I think that's what you're starting to see, is particular in the gold equities. And from what I've heard from other conferences, such as BMO, that there's some generalist money that is starting to at least look. And especially if it's American generalist money, I think that's a really good sign. Of course, they need to start buying something. But again, that's a good sign. People are starting to put it together. The central bank buying we've seen over the last 2 years is also indicative of what's going on in this world. And I think that's what's starting to catch people's attention moving into 2024, a U.S. election year. There could be even more turmoil ahead for us, and that's usually good for gold.
Okay. Interesting point on those generalists. They're at their window shopping, so we just need them to come into the store, hopefully. So I wondered if you could share a little bit more on how you're positioning among the gold stocks in that case.
Sure. So companies like Norland, I've been burned in the past playing exploration, and it's been a really good learning experience for me because unfortunately, I think most people have to learn about the risk associated with exploration by losing money. To me, I've moved a lot of money into either prospect generation or hybrid of the two. So like a prospect generator basically goes out, assembles projects, creates targets, and then goes to the senior miners to pay for exploration work and comes up with a deal on that project. It's a good way to play it. However, a lot of investors don't want to take the time it takes to get that yes answer or that discovery. And so maybe the hybrid model of the two is the one that attracts more people, and it's definitely attracted me, where instead of those 5 projects optioning them all, they option 4 of them and take one for themselves. And so like another company, Orion Resources, that's in Finland, they've been drilling their own property there, but it looks like the value right now that's going to catch the market attention is actually in their joint venture company or joint venture project, Helmi, with B2 Gold. And I think considering what's going on in the central Lapland belt with Ikkari right beside them, again, this is another story I think that's going to catch attention. And so that's another thing I've been putting money into, both precious metals related, but also ways to play discovery without necessarily taking the huge risks you take when you go 100% in on an exploration project.
Yeah, I think definitely a little bit less risky can certainly be appealing for people. So that's a little bit about what is going on with gold. And I'm interested also to get your take on silver, because we didn't exactly say gold is necessarily going to go way higher, but silver we do hear tends to follow gold and it outperforms, as well as the silver stocks. So thoughts on silver and silver stocks? Yeah,
well, the history shows that silver is gold on steroids. And continually, if you look at the charts, you'll see that if gold moves up 50%, silver's moving up 200%. And I think you're going to see the same sort of, history past is prologue, history will repeat. Silver's a little bit different. The industrial component to it has made it much more volatile. And that's actually a positive in many respects if you can buy it when it's low, but it has that upside potential. But whether it's solar panels or, the electrification of this world, silver's not only going to be a part of that, but it also has that monetary component, which I think becomes ever present. And so, yeah, there's going to be an opportunity in silver. But again, to me, the investable companies out there is super small. And in particular, I'm only invested in one company that you could necessarily call a silver company, just sort of for those reasons. But for investors that are looking for leverage, but you have to expect more volatility, silver could be a great play in the next, 2 to 5 years.
Okay, good to know. Yeah, I know the universe is very small of silver stocks. Okay, so going over to copper, this is another metal that you mentioned in that January presentation. And I like the point you made, so I'm going to make sure that I paraphrase you relatively correctly. So essentially, you were saying we've got these recession concerns, and they're kind of facing off against the net zero goals. So can you go into those dynamics and what they mean for copper?
Sure. So I think most analysts, myself, if you project out to 2050 and what it means to get to net carbon zero, most people are probably going to tell you basically need to double the copper production, which is massive. Not only is it massive, I don't think it actually can be done, but that's kind of besides the point. So that's the opportunity. That's on the demand side. The flip side is that demand is going to be affected by a potential recession, and the recession that most people have been calling they've been calling it for well over a year now. And has it really happened, or is it happening? Is it going to all these questions? And so my point was that you've got this great outlook for copper demand. It could be contrasted in the short term because of a possible recession and how that precipitates out, because copper is sort of that, Dr. Copper. It tells you how the economy is doing. So A recession in the short term, I think, could definitely affect it. But long term, I think regardless of recessions, regardless of where spending is on a government level, spending is going to go towards infrastructure. It's going to go towards EVs. And you can be assured that there could be chaos around, but I think people are still going to spend money on copper. It's just what your time frame is. And so that's sort of the point. That's why I say maybe it's going to be the next one, depending on what we get in terms of recession or not.
Okay, thank you for explaining that. I think that makes a lot of sense. And so my follow-up was going to be, is it now the time to start putting money into copper? Is that what you're doing? But then it sounds like you've got to figure out your timing.
And I also think it depends on what your kind of company you're investing in. So if you're investing in a copper explorer, or let's say a prospect generator that explores for copper, discovery can give you a win or give you profits regardless almost of where the rest of the market is. So I wouldn't be quite as concerned about timing if you're on the exploration side, but that's definitely risky, and that should align with you if that's what you want to play. The developers, it could be argued that now might not be the time to invest, but again, these are like individual company things where you have to figure out what's involved in that company, what they're going to be doing over the next year. Are they funded? Are they a world-class deposit, or is this something that's sort of in the mid-tier? I think if you stick to the world-class stuff, those sorts of deposits, the share prices might go down, but my thought would be is that they're going to have interest from the majors and from investors almost regardless. And don't be too concerned about being perfect about your timing. Buy in tranches, ease your way into it. If it's falling, let it come to you and just take your time into it. But again, if you're picky, you stick to that best of the best stuff. The timing, to me, is the secondary part of it, just as long as you can actually hold the stock, which can be a problem.
Yes. And you always do a good job of reminding us, you shouldn't base your investment on the commodity and what itself is doing. So good to talk about that as well. Now, I also want to look at nickel. I know this is a market that you cover. There's some interesting things going on at the moment. Yeah. So I was reading this Bloomberg article last week or so about how the major nickel miners are pretty concerned about the Indonesian outlook. And so we can talk about that. But one point that I thought was quite interesting is the big miners, they have a greener product, and it's just not really that appealing to the buyers. So I'm sure there's many insights you could share there.
Yeah, the Indonesian nickel production has really been a cause for concern for a lot of the rest of the world, because they can produce nickel matte, which is then converted either in Indonesia or China into a nickel sulfate, which can feed the battery market. And the real problem is they create it at such a discount to what the sulfide producers are doing in the tier 1 nations that that's where you get this kind of disparity, and the nickel prices kind of falling off a cliff. And at that article, that might have been what Twiggy was asking the LME. He said, we need to differentiate between clean nickel and dirty nickel moving forward. And I think that's something that's absolutely going to happen. I think there's going to be a bifurcation in price. I don't think it's that cure-all. Coming from manufacturing myself, and I see how things operate in the world, you're still going to get infiltration from the cheaper nickel, but it's going to be harder. And you're going to have companies such as like the Sumitomo's in the world. If you go back and over the last year, they're one of the biggest players in the nickel market. Look at the investments that they've made. They've made investments in junior nickel companies in good jurisdictions. That's how they're going to say, I'm buying clean nickel. I'm buying, let's say, responsible nickel. And that's how they're going to differentiate, instead of maybe going to the LME or going to these global exchanges and sort of getting whatever smorgasbord is they have in inventory. So I think that's what you're going to see moving forward. These big nickel companies that are actually concerned, or maybe battery makers, I should say, actually concerned about being green or fulfilling some ESG requirement. I think they're going to probably look at going to the source, or you're going to see them push for this kind of designation. Where did this come from? The tracing back to its source, because the Indonesian laterite ore and the HPAL production comes with a huge carbon footprint, especially when you think about where it's transported in some cases around the world to get to you. And so the whole idea of using EVs to electrify and to reduce emissions is kind of counteracted with where it's coming from. So if the idea truly is to go green, then this has to happen, and I think it will happen. But again, the timelines are always when. So
okay, but so there's an angle for nickel in there. So it's like, yeah, okay. I think the final thing that I wanted to follow up on is oil and gas, because when we had last spoken, you said it was quite a big part of your portfolio, and I wanted to see if that is still the case.
It's still the case, and I still think I see every reason to see an oil price that's higher over the next 2 to 3 years. I think my time horizon might have to expand if we do indeed hit a recession, and how that might precipitate into the oil and gas market. But I'm still bullish. I'm still bullish on the whole sector, especially when we get into moments like this where sentiment is so bad, and you can see how society says they want to move forward. If that truly is the case, then I don't know how you can't be a bull in the resource sector, sort of regardless of what it is. You just have to have the time span to last, to hit that bull market when it comes. And that is not easy. That's easier said than done. But again, people with outlooks that are more than 2 months, I think eventually get it and start to come into this sector.
Okay, I think I kind of came a little bit full circle in this interview, but I'll put it back to you and ask if there's any final thoughts you want to share, or perhaps where to find you, anything else.
Sure. So I publish Junior Stock Review Premium. You can go to juniorstockreview.com. I also have a YouTube video series called Field Notes, which follows me to the site of the companies that I'm invested in. And really, I'm very privileged to be able to go to the site. And I think for the regular retail investor, they're not going to be able to do that. So I think it's a great opportunity to go and see site with me in the companies that I'm investing in.
Yes, I have enjoyed what I've seen of it so far. It's really well put together. Okay, thank you so much for coming by to talk. Always really good to have you.
Thanks for having me.
Okay, and once again, I'm Charlotte McLeod with investingnews.com, and this is Leni with Junior Stock Review.